and fear in the eyes. I think we're good though. It's always a crapshoot in a hotel, man. But I'll like whenever I check in, and I know I'm gonna do it here. I'll like get like elevated internet and everything. So, all right, you ready, man?
Right.
Ready to start this thing?
I'm ready.
Let's go. All right. Hello, welcome, everybody, to your weekly edition of the Not Your Average Investor Show. Today, we are talking with a guest investor. We met at the summit this year. He's got a really interesting story. Started around the same time, and he's just um, kind of absolutely crushing it right now in life and real estate. I'm your host, Pablo Gonzalez. GC is not here today. He is on his yearly golf pilgrimage. In his stead, we have guest investor out of the oil fields of Texas, Josh Wedding. Welcome to the show, my friend.
Thank you. Appreciate it, Pablo.
Josh, yeah, man, we met at the summit. That was really cool. I appreciated your energy. You've been following along the community for a while. Have you been like watching the show for some time?
Yes, I've been following really since I first invested in 2022.
Okay.
So not always able to make it into the live show just because of my schedule, but
Yeah,
I
yeah.
pretty much always listen to the podcast if nothing else.
Well,
So
we'll get into that. Are you familiar with the tradition that we start the show off with?
I am the roll call.
The roll call, baby. That's right. We got the MVP Lee kicking this off, a fellow Texan with you. We got our leadoff batter hitting second today, John Henning. We got the KOB King of the Beach, Christopher Lee in Fernandina Beach. We got Il Maestro, Mr. John Williams out of Long Island, New York, saying hello, everybody. What else we got in here? We got our regulars, Gary and Rosalind Riley, with a good morning from Murrieta, California. We regard you. Gary and Rosalind. We got the ringmaster, Drew Barnhill, with a good day to all. We got El Gran Amigo, Bill Shields, with a buenas tardes desde Duval. We've got Eric Killo from Blooming Prairie, Minnesota. Eric, I think that's a new name. Welcome to the show, my friend. If you are new here, the game is in the chat. Everybody in the chat is all people that are real estate investors, clients of JWB, other folks that are just kind of like getting educated. Make a friend in the chat. Everybody's here to share, Eric. So happy to have you here. Pumped that you chimed in your first day. We got Saran with the plan in New Jersey. Saran, good to have you. We got the Shaw man of the Not Your Average Investor community, Nadeem Shah, with his trademark good morning, good afternoon. Pamela Myers, our favorite smile from the Pacific Northwest. We got Michael Payne in the house. Michael, I'm not sure if it's a familiar name, but I feel like it's a new name. Good to have you. We got the Maven from the mountains of Denver, Leslie Wilson checking in. Good to have you, Leslie. Good roll call today. We got a lot of regulars. Justine Herrera from Burbank, California is back. Good to have you. Ken from Vegas. Ken, I think that's a new name. Ken Edmonds. Welcome to the show, my friend. Like I said, if you're new here, make a friend, talk in the chat, ask questions. Josh is a client that has been a client. We're going to go into his story, how he got into real estate investing, and all those good things. But this is an open kimono show just about the experience of investing in rental properties. Josh, I'll start with kind of like I think where all the conversations around JWB and real estate investing start. What's your why when it comes to investing? Like, what made you want to take this like not so traveled path of becoming a rental property investor?
Well, if you don't mind, I'll start kind of with just like investing in general because it quickly transitioned into real estate. But
Cool.
basically in the beginning, man, like I'll never forget a moment. I was 20 years old and I was newly married, and I had a cell phone bill that was duly late, and I remember about to go to work, and I remember trying to make a decision as to whether I could pay my cell phone bill, and if I did, would that leave me enough cash for gas to get to work? And so, man, I at that point in my life, I just realized, like this isn't okay. Basically my why became I don't want the lack of money to keep me from being the best version of me,
Mhm.
and that's a husband, a father, now a business owner. I saw the way that I interfaced with that stress, and I saw that it changed me. And so yeah, at that point in my life, like I don't know, there was over the next several years, like a flip switched in my mind, and I just said, whatever it takes, right, to not have to live this way.
Mhm.
And so the why really is just that. It's I don't want the lack of money to prevent me from being the best version of myself. Like I want to not only just be able to handle my responsibilities as a father and as a
Mhm.
husband, but also, after I handled those basic responsibilities, I started to see the opportunity for some margin in my life. And then it's like, wow, now I can actually like help people that I love in my life. I can actually have experiences that enrich my life.
Mhm.
Um, so yeah, I think it was just some of those moments of knowing not where I wanted to go or how to get there, but knowing I didn't want to be where I was, right? And
Mhm.
so it was like one foot in front of the other. And eventually we'll get to how I came to real estate. But
Yeah.
um, yeah, man, that's really how it began. And I think I was introduced in my early 20s to a compound calculator. And that kind of changed everything, right? Because it was like I was somebody that was just living paycheck to paycheck and didn't really have a lot of vision or aspiration for like, getting out of where I was. And so that like just literally seeing a compound calculator and be able to plug in some little numbers over a long period of time and see, hey, even if it's not me just, getting rich, right? Over my life, like I can change a family tree potentially, certainly my life and my family's, but potentially a lot more. Um, yeah, so that's where it
Man,
began.
that is that's really interesting, man. Like I have heard over the last year or so, I've like fallen in love with this idea of entrepreneurship as a vehicle for personal development. And
Hmm.
I'm sure that we can kind of like, bond on that. But I feel like this idea of investing and financial stability as a I don't know if you'd call it a tool for what you're saying, but it's almost like as a foundation to be able to do personal development, right? Like to be able to like show up as the best version of yourself. I don't know if I've ever heard that before, man. That's a pretty deep realization. You were 20 when you had this realization of just kind of like I don't deal well with stress, so I need to build like a better floor for myself if I want to be the best guy I can be. Is that what I'm hearing in 20s?
Yeah, so I married at 19
Yeah.
and yeah, shortly after, it was like I think I'd always kind of I've always been kind of a driven person. I started working at a farm when I was 11, and so there's kind of like this opportunity at a really young age to have a work ethic and, start putting money aside. And, things change once you move out of your parents' house and all of a sudden the bills become yours, right?
Yeah.
Um, but yeah, I think it definitely um changed over time,
Hmm.
but I can certainly say like I had a realization of the way I interfaced with stress, and I acknowledged at that point that it didn't look good on me and it changed me, right? It like I felt that I responded differently to people that I love and I acted differently just because of that stress. And like something I have a lot of compassion for a lot of people just because I know that's true, right? People get stuck in this cycle of the pressure of those finances. Popular radio host who I don't follow everything he says, but one thing that I always found interesting was he would always talk about, um, 50% of divorces basically or more basically are money fights, money problems, right?
Yeah.
And so I was always somebody I will say that kind of was like really kind of looking forward and trying to plan and think and so like I kind of adopted this mindset of always when I make a decision, think about what will my future me thank me for, right? And
Mm-hmm.
so I think, just knowing, here's a statistic, right? That's like a real data that says, dealing with money fights and money problems and the stresses that come with that, like have a 50% probability of destroying your marriage, right? It's like there's many, that's one of many incentives, right, to try to find a way out,
Yeah.
right? So,
Yeah.
yeah, that was just kind of a piece of the puzzle. But to answer your question, yeah, I think I did realize very early that that stress and that lifestyle of being paycheck to paycheck and just kind of getting by wasn't what I wanted for many reasons.
Yeah. That makes sense, man. That's really cool. I hear behind this, behind part of it, and something that I'm echoing with is just kind of like, I think being married for me has been a really, really great experience in the sense that like my wife is very much like an inspiration and a model for like me wanting to be the best version of myself kind of thing in order to, like once you're in a relationship like that, it's just like you can't hide and you gotta be yourself. Like you gotta be the best version of yourself kind of thing.
Yeah,
And that's really
yeah.
cool, man. Yeah, that's awesome, man. Then talk to me about your investment journey, right? Like I think you've told me you feel you told me before the show that you feel pretty good about not just your real estate portfolio, but you feel pretty good about having a like a well diversified kind of like investing approach. Can you kind of like tell me
Mhm.
the how you worked up investing and then at what point did real estate become a piece of this?
Yeah, so I ended up moving and going to college in Florida at Universal Technical Institute, which is just pretty much a technical school, trade school for automotive. And then I got drafted out of that school into Denton, Texas to work for a big oil field company, Schlumberger, in a big central maintenance facility there.
Hmm.
And, I didn't plan to go into the oil field. I planned to be in automotive space. But once I got out of school and I'm like looking at the student loan bills and I saw what they were going to pay back in Michigan for an automotive tech and I'm kind of young, newly married, no kids. So they ended up having a job fair at my school and I ended up taking that job and moved to Denton, Texas. And I'm like, man, I'll grind it out for a few years, right? Get the student loan debt paid off, see what comes of it. Just the money they were willing to pay was a lot more than what I would have in the automotive. And come to find out, I just kind of excelled in that hydraulic and electrical space. And so, what really led me into investing, though, was, probably about a year into the oil field life. Um, I was like beaten and battered and, 60, 70, 80, 90 hour weeks. I would get loaned out to location and work, 15 days to 30 days straight. And it was just, I realized very quickly that I was working really hard for my money, but my money wasn't working hard for me. And I also kind of in that moment, there were a lot of old heads that I worked with, really great guys that and gals that had been there for a long time. And man, they were just, in their 40s, 50s, whatever it was. And I saw like a brokenness, not just in just the stress and everything I'd gone through for 1 year, but doing it for 20 plus years, right? And I mean, physically, mentally. Um, and so I realized very early on, man, it's like, this isn't sustainable forever, even if it was sustainable for me to do for
Hmm.
20, 30, 40 years, that's not what I want. But for me to ever have a chance of basically getting past this, I need to make my money work for me as hard as I'm
Hmm.
working for my money, right?
Hmm. Yeah.
And so honestly, just started poking around, the internet, which can be dangerous or, great. It's mixed bag, but I just took in a lot of information from a lot of different sources.
Hmm.
Um, and, you know, can't say I found any that I just agree with on everything. It was just one of those things, right? I mean, it really became trial and error, to be
Yeah.
honest.
Yeah.
I think I set up an E-Trade account at the time and I started, just buying some ETFs and some mutual funds and playing around with a little bit of the portfolio and, just young and kind of, learning.
Hmm.
And as as I as I did that, basically, kind of simultaneously, I started to, you know, look at real estate more closely. And some of the best lessons I learned actually was part of a group called Skill Incubator. It was a pretty cool little educational group that I joined, and it was pretty heavily focused in the early days on on crypto, but they have a lot of stock experience as well.
Hmm.
And so, um, I was interested in getting into real estate, but I really wasn't at a place where I hadn't even enough money to make a deposit, even let's say on a turnkey property.
Hmm.
So my chance to start per se, or my opportunity to start was I ended up joining Fortune Builders, and I started doing some wholesaling and bird dogging. I never did any flipping. That was really above my means. I was very consumed, right, working so much in my
Hmm.
career that the bird dogging, the wholesaling, that part of it was really all that I could do.
Hmm.
So I did a little bit. Even that ended up being far more time consuming than I thought. Wholesaling is pretty much marketing and then learning to, negotiate the conversations and not waste trips to people that aren't motivated. It's a whole ordeal and ended up being a lot more time consuming than I thought it would be.
Hmm.
Um, so yeah, I kind of in the back of my mind, right, I knew I wanted to do real estate, but I just wasn't there, right?
Yeah.
Um, so I ended up joining this group and just kind of getting educated. And I spent honestly about 2 or 3 years. I actually started kind of a little bit of a nerd. So I grew up like building computers, loving computers, electronics. And so I actually started to mine Ethereum, a cryptocurrency.
Okay.
And so, yeah, I was actually heating my house in the winter. Like that's how much heat I was generating. So, yeah, I was mining Ethereum. I got really dialed in for like 2 or 3 years. I mean, I had kind of a stock portfolio, which became more passive over time. I had some goods and bads and some wins. And,
Hmm.
I learned ultimately that was something I was just going to make more passive and buy some ETFs. And again, this is, you know, I always tell people it's one of the things that has always bothered me. And like even when I was doing research and trying to learn about investing was people kind of acting as though like even though there's broad truths that there's a one size fits all, and that's not the case. It's like
Hmm.
personal finance is personal. So for me, it's like I was a young man, no kids, had a good income, and
Yeah.
so like quote unquote risky things weren't really risky for me, right? Like I was throwing a good percentage of my portfolio at these things and um anyways, yeah, I ended up having some really big wins in crypto trading primarily. But the thing was, I was always very self-aware. Like I had the ups and I had the downs, and I had ended up having some big wins. But I knew what it was, from the beginning. I knew it was a high risk, high reward investment, and I also knew ultimately I made basically a pact with myself, right? That if I ever come to this moment, I wake up and it's worth something that I consider life-changing, right? Then I'm flipping out of it and I'm taking that money and building a stable base, right?
Hmm.
And so for me, like the stable base was real estate. So that actually comes to the 2022. I had been kind of saving, little by little and building a diversified portfolio, some stocks, some equities, some like public and private REITs, that was
Hmm.
kind of the exposure I got to real estate was
Hmm.
before I had money to make a whole down payment. Um, I also missed somewhere in the process there. I finally bought my first turnkey property in University Heights, Ohio. And I owned it for around 10 years. Um, and yeah, it was not a great experience. I had some years of appreciation, but I had really poor execution, I would say, on the property management side. It
Hmm.
ended up being something I bought to be passive and it wasn't passive. It ended up being a headache.
Hmm.
So I continue to hold it, it appreciated some and I'm like, in my
What,
mind,
what
that's what
what
it
year did you
was.
get that property in Ohio?
Man, I think it was probably 2012 or 2013,
Okay, cool.
I
Yeah,
want
so
to
10
say.
years before you
Around
bought
10
your JWB
years.
properties. Yeah, yeah, yeah.
Yeah.
Okay, got it.
Yeah, so I had that experience, that going in the background. Like I learned some big lessons in like the trading journey that I had. And I think the most valuable one was just I found, you know, what makes a good investor, what made me a good investor at that phase of my life, what caused me to have the opportunity for the wins and end up having some of the wins
Hmm.
was really not about, man, I can do perfect technical analysis, I can do perfect fundamental analysis. Like it wasn't, it wasn't all that. It was really understanding like human emotion and human nature,
Hmm.
and more importantly, my human emotion, my human nature, the way I responded to volatility, right? Because it's like the old Warren Buffett statement, like, you know,
Hmm.
buy when others are fearful and, like, you know, sell when they're greedy, basically. It's like that principle, right? It's like what I found was natural to me was almost always the opposite of what I should do on an investor basis.
Hmm.
And so that was a big lesson I learned along the way. But 2022 had some really big wins in crypto and did exactly what I basically agreed with myself I would do. And that was, I woke up one morning and just, felt that it was, one of the things I learned in that group, which was really valuable, was number one, like there are no guarantees. And anybody that tells you there's a guarantee run, but what I learned to trade based on was possibilities and probabilities. So every single trade or investment that I weigh, right, it's like possibilities and probabilities are what drive the decision,
Hmm.
right? And so that's can be a little bit subjective, right? But there's also a lot of data, which is what, Greg commonly talks about, right? That can largely help you determine the possibilities and the probabilities, right?
Yeah.
But the second most valuable thing that I learned, or maybe the most, was I learned to frame every decision that I made financially around the minimization of regret. that's something that the mentor that I had taught me, and it kind of blew me away because it really did reframe every decision that I made, right?
Mhm.
And this goes back to the personal finances personal, right? It's like
Yeah.
every decision that I made, if I was in the middle of this trade and I was trying to determine, um, if I sell here and I know what I think I know, and I think the probabilities there's a lot of room left in this market for it to go, and I
Mhm.
sell today, will I regret more, you know, missing out and watching that appreciate the way I think it could, or would
Mhm.
I regret more if I don't sell and it
Yep.
rolls over,
Yep.
right? So it's kind of it's a very valuable tool, I think, as an investor to analyze your decisions, right? So I ended up waking up one morning and just at that point I realized I would regret, right, the amount of money that was sitting there,
Mhm.
and not extracting that from that kind of high risk volatile thing because I knew like it could just be gone tomorrow. Like it could be half tomorrow. It could be like that was the world I was living in.
Yeah.
And so I eventually cashed it out. And um, because of the experience that I had with the rental property I had, um, I started looking for advice. I still wanted real estate, right? Like
Yeah.
all the attributes that I wanted coming out of this highly volatile, high risk asset, um, I wanted away from. And I wanted basically what I considered the opposite, right? Which was like a real tangible asset, serving a real purpose, real ground, real home, and something that has a really consistent history of just, appreciation being, inflation adjusted, right? It was basically exactly what I wanted as a base coming from that craziness. So I was part of the Fortune Builders Group and they put me in touch with JWB. I think I ended up interviewing a few different turnkey companies and then yeah, I landed on for multiple reasons, just the people that I interfaced with as well as my research on Jacksonville, I think
Mhm.
was a big one.
Okay.
Um, that was honestly a difficult part of my decision, partially because I do like diversification.
Mhm.
This is like kind of for me, this is very concentrated, like having five now, almost seven properties in, one city. But I've always kind of been that way to some degree. It's like I want diversification, but not just for the sake of diversification. Like I want to be diversified and um, spread across different, investment types. But I
Mhm.
do pick to some degree what I think is going to be winners and all the things I saw in Jacksonville and like I said, the interactions I had with JWB were what ended up ultimately leading me to make the purchase with them.
And that purchase was four properties over time. Well, you know what? Let's do this. I'd say we do this a little bit differently, right? Like normally we spend a lot of time here and then we go into the investor story, but I think I wanna like talk about your portfolio and then I want to dive back into this like minimization of regret stuff, the idea of like taking chips off the table, kind of like where
Mhm.
you're at on this journey. I think it would be make a better kind of like narrative if you're cool with it. You cool with it?
Perfect. Yeah.
All right, so let's go into your portfolio. This is your success story. These are numbers based on actual results, right? Like this is not a financial projection or anything like that. This is informational purposes only. Everything has risk here, but this is what you've been through, right? You bought five properties in 2022 with JWB. Looks like you bought two in January, one in February, one in April, one in May,
Yeah.
all conventional loans. Do you remember at this point were you putting down like 20% down, 25% down, 30% down, anything like that?
It was 25 or 30. I don't recall exactly which of the two.
Okay.
I believe it may have been 30 to be honest.
Got it. Yep.
Yeah, but it's kind of, I mean, I'm not a time to market guy per se, like I believe
Yeah.
in just dollar cost average per se, or I believe in Um, but I will say like it was pretty awesome because the timing, that's part of the reason why actually that played into my decision to actually sell was this was right when every indicator was, inflation was kind of out of control and it was kind every indication was that interest rates were going to start to rise.
Yeah.
And so I ended up nailing some like 3.8s or around four, which is pretty good
Pretty
around the
good.
time. But I think actually between from literally January to May, I want to say it was like a percentage and a half or more in
Yeah.
interest rate. That's how fast things were moving. So
Yeah. 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 You got another good time. So just to be clear, you cashed out this crypto portfolio to do this, or did you also sell your Ohio property and like 1031 exchange it? Talk to me a little bit about how you funded this.
I didn't 1031 exchange, so
Okay.
I actually did not sell the property in Ohio until I decided to start my business 3 years ago. So
Okay.
yeah, I was still holding it. And I kind of wanted to sell it, but there were some complications, long-term resident and stuff. So I was just ended up holding that property at that point. And so no 1031 exchange. I ended up selling that ultimately as some seed money for the business when I started a few years ago.
Mhm.
But yeah, as far as this goes, this was primarily the source of that big trade, but also just, years I'd been kind of piling money in like stocks and ETFs
Mhm.
with the ambition and the hope of getting enough money to make a down payment on a rental, right? And so that kind of just accelerated, obviously, like case to say, kind of like massively accelerated it. But
Yeah. Yeah.
yeah,
Is there a reason that you bought five? Like, was it like, did you have a number in mind of properties? Was it just kind of like I have this much pile of cash and I can afford three, but if I stretch, I go to five? Like, what was the reasoning around acquiring five in like this short amount of time?
yeah. I think I will say I planned on buying two originally, the two I bought in January. Um, but as I kind of read the market, I realized I thought a lot more about, I guess, for me, another big like thing that I learned in investing and just life in general, right, is everything is relative, right? And
Hmm.
so the problem, I was sitting there and I was going to buy two properties, and I knew long term I wanted way more, right? That was something that I
Hmm.
knew.
Yeah.
But I also, because of the poor experience I had in Ohio, my thought was, dip my toes in, with a couple properties and see if this is better. But yeah, I think I was so confident after, interfacing, exchanging, and dealing with JWB a little bit. And I had a few months there that I started to just look at things again through the realm of like relativity. And I'm just like, what ended up being was I don't see anywhere better to put my money, right?
Mhm.
That's ultimately what it came down to is like I know long term my goal is to have many, many more of these properties. One thing I love about real estate, what always attracted to me is it's it's the thing that produces income the most similarly to how I budget, let's say, right? I budget on a monthly basis, right?
Yeah.
So it's
Yeah.
like for me, when I'm thinking of the future, I'm thinking of a passive portfolio and I'm thinking of generating income to live off.
Hmm.
It works really well, right? I budget on a monthly basis. I need this much money to live every month, and every month, I get paid rent. And so I knew I wanted more rentals ultimately long term, but I think just in that moment of time when I think this is kind of a unique moment of time in that I think we have historically low interest rates, and I think they're going to probably go up quickly. And I looked at, what interest rates rising means for equities and everything else, bonds,
Yeah.
and I just kind of looked at the situation and I said, I don't see anywhere better basically for it. So, let's just go ahead and accelerate these other purchases. And that's how I came to it.
Interesting. Interesting. Yeah. It's you and I bonded over this in at Summit that it's like we both had these moments of we had a high run up of something and
Mhm.
then we both decided to take chips off the table for like a higher floor experience, right? Like I
Yeah.
had my thing where like I put money into Peloton like right before the pandemic broke out. A year
Yeah.
later, I was just like, dude, this is a house. And and, and I cashed it out and picked up a house based on a historic run up that when I look back, I'm like, damn, dude, like I didn't cash it out at its peak, right? Like I think probably like that stock had reached like maybe 133 and I cashed out at like a 121, but these days it's like at like eight.
Wow.
And
Yeah.
there's just like so much to this idea of, I also had, like you too, I also had this other portfolio that at the same time I was trying to get up to three houses, right? Like that was my
Mhm.
threshold I wanted to hit when I first started. And I had I had an old IRA that didn't have enough to buy wholly in it, but if I cashed it out, I could. And I did it and I went against like my financial advisor's advice, right? Like I guess what I'm trying to say is that there's a lot to this idea of every asset class has its place. Every asset class, can do well for you. There's something about the real estate asset class that gives me a really, really good feeling of like, I'm just gonna pull forward as much as I can right now and put it there because I know if I let it do its thing over time, it's so like well proven, and
Hmm.
it's gonna like breed really really good results for me. So like, yeah, I'm good to ride like a roller coaster for a little while to try to like build some equity, but
Yeah.
I do subscribe to this idea of like build equity in like riskier things and then take chips off the table and put it in real estate because it's such like a rock solid foundation that through this show I've learned is kind of like where I want to, I don't know, where I want my floor to be kind of thing. It sounds like something you've done, that you did in 2022 at least.
Yeah, it's kind of like you heard like the barbell approach of,
Yeah.
yeah, it's kind of like, usually that means something a little different, but for me, it's like I don't have a lot in the middle at this stage of my life when it comes to bonds and treasuries and so on. But for me, that's what it's been, right? It's like kind of high risk, high reward, volatile things here. And
Yep.
then I scale money off that and I put it into this stable base, and for me, the real estate was the most stable. It's the thing that ultimately at the end of the day, right? Like when I had all that crypto value that was swinging, I mean, I could hit a refresh page and it was tens of thousands. Like, it was crazy, right? Like, I don't long term, I don't sleep well like that, right? But I sleep well having the real estate. And I think I'll mention really also, which I think is just cool value add about it is, obviously we have like an affordability crisis in America
Mhm.
when it comes to housing, and that's ultimately a supply issue. And so I just think it's kind of neat, right? It's like, if I invest in a stock, um, I have money going to this massive conglomerate that just has some pie in the sky PE ratio that's kind of subjective, right? Versus this investment is actually going towards, in this case, in Jacksonville, like actually building property and actually a home for somebody, and that also kind of being part of solving a bigger problem, right? And so to me, that was a really cool kind of value add about the whole investment and what I'm investing in. So,
I'm really digging how much, and Leslie mentions this in the chat, or the Maven from the mountains, this insight of like very few people having understanding the impact of emotion on decisions.
mm,
And it feels like you're just like really tied into that. Like whether it's this emotion of I like investing in a critical need, or this emotion of like I know that the roller coaster thing doesn't suit me well and doesn't produce the best version of me. Um, and seeking out kind of like an emotional state that come from your investments, I think is pretty remarkable. Like it's like it's something that like you can't unsee it once you see it, but you don't really see it very often. And I think you're a really good example of someone that's really tuned into that. It's really cool.
thanks. Yeah, I'm kind of an emotional person generally, I would say. So it's
Yeah.
something that I really had to realize, like, man, I have to understand, right? To get where I want to go, right? I can't just let
Yeah.
kind of momentary emotions or ever drive my decisions. So I think that's a huge part. I really do think that's a huge part of being successful as an investor is learning how your emotions pull and tug at your decisions, because
Yeah.
one thing you can have 10, 20 years of making good decisions, and then literally in one moment, right, you can give
Yeah.
it all away. I mean, that's so,
Yeah.
yeah.
Yeah. Yeah. Yeah. Totally. Totally. Absolutely. It's a lot easier to give it all away than to build it. So,
There
so
it is,
to be,
man.
to be at
Yeah,
that
that made
moment.
credit cards really easy to scan. Yeah.
Yeah. Yeah, yeah, yeah. And like, it's kind of what they're saying right now in the chat, Michael Payne and Leslie, they're talking about giving the money printing, like hard assets being the only option. Sometimes you build it for a long time and you give it away because of your emotional state. Sometimes it's not even up to you, right? Like sometimes
Yeah.
it's like something's happens in the market, and these real estate assets truly are diversified. Whether you're in one city or in many cities, each
Yep.
home is like a diversified asset all unto itself that holds its value and keeps up with inflation and does all these things.
Yeah.
But I want to just kind of like hit on, we talked about your initial investment. You said you timed the market pretty well, right? Like you've done really well, right? Like this is a really, really good kind of, you got in. This is 4 years worth of returns, right? Like a
Yeah.
16.3% IRR, a total profit of, a third of $1 million here, like 333,000. You have pretty decent, like rental income here. You've got obviously great home price appreciation. tax savings and all the good stuff. And you've got like the quintessential Pac-Man happening for you, right? Like your your home price appreciation is this like big piece of the pie, even as interest rates went up and all these different things happened. You've got a
Yeah.
decent amount of net rental income, right? Like it's like the quintessential Pac-Man that we go through that over 4 years has really worked for you. Um, and we were just talking that you're now in the property baby phase of refinancing and getting more properties, right?
I am. Yeah. So I just actually completed 5 refis, so I refied all of them. It was a little bit of a difficult decision, I will say, primarily because of the interest rates. I was
Yeah.
flipping some interest rates higher, but yeah, I did a lot of analysis, kind of just, man, over 5, 10, 15 years. And for me, again, in my personal situation, um, to be honest, like several $100s or even $1,000 of cash flow a month is negligible. Like I'm young, I'm still working, have a good income, right? So for
Mhm.
me, when I looked at my circumstance and what the real estate play was for me, it was ultimately, I know several things. I know number one, ultimately, before I quote unquote retire or just want passive income off these, I want more of them, right? And that's years down the road that I plan to ever need that per se. So any way that I ran the math, right? Like to me in my current life state, the cash flow was negligible, basically, whether I would refi, whether it was several interest point rates. So I ran out a bunch of scenarios and ultimately 10, 15 years from now, it was millions of dollars of difference, right? Of refinancing. And of course there's some assumptions built into that, of course, like appreciation. But I built a bear case, I built a base case, I built a bull case, right? And no matter how I looked at it, right, like with my goals, it got me there sooner by having more properties. And I realized for me, it's not a cash flow play at this stage of my life.
Yeah.
And so it really is appreciation with leverage, right? Like that's what the play is. So you can see 16, 17% rate of return. Um, at the leverage ratio that I'm at, if we get some historical appreciation, like that's something that's very feasible over the next 10, 15 years and probable in my mind, right? So
Yeah. Talk to me about that. We talked about that analysis at the summit. We talked about it on like Saran show, this idea where it's like it is it's even it's tough to give up on like you have this portfolio, you're getting you said it like $1,000 a month in cash flow, right? You had like 5 houses giving you like 250, something like that,
yeah,
$1,000 a month in cash flow. You know that you're going to refinance into a um again, you acquired these properties in 2022 because you knew that interest rates were going to go up. I'm assuming that the interest rates that you have now that you're refinancing into are higher than the interest rates of the when you bought it in 2022. And yet, you're looking at this thing from that analysis of like, hey, in 15 years, basically putting my equity to work for me that is just sitting there in this house instead of, like putting it to work for me right now is going to lead to this much more, this much bigger piece of a pie. And in the meantime, it's my active income that I'm living off anyway. So it's not like if I'm using this like passive income to pay off bills. What
yep.
what is what did that analysis look like for you? Did you sit down with like JWB and they run it for you? Did you run your own? You said you ran multiple scenarios. Can you talk me through kind of like the numbers you were actually looking at?
Yeah. So I did go with Brandon through, my portfolio, and so I got the JWB presentation. My basis was very similar.
Hmm.
What I ended up doing is just I spent an evening with Anthropic Claude,
Yeah.
and I just kind of ran a bunch of scenarios, man. And I actually I had like the basis for from JWB for what's property management cost and maintenance and vacancy and all these things. But I actually went back and I took my exact portfolio for the last 4 years or so, and I kind of came up with my own numbers, input them, and then I ran a bunch of scenarios. And my ultimate decision was with the portfolio that I have there, 15 years, like to kind of give an idea, it was roughly, if I would have not refied 15 years from now, the projection was I'd probably have somewhere around $60,000 a year of cash flow just from
Mhm.
those five properties, right?
Mhm.
Um, but the actual net value of net worth of actual equity
Mhm.
versus doing basically a serial refinancing where I'm every 5 or 6 years over the 15 years, assuming the equity's there, basically rolling, snowballing the properties, it ended up being about double literally the value. So it went from about $2 million of net worth in real estate over
Mhm.
15 years to
Mhm.
four. And that was like at a base case, and even with a bear case where we had like 2 to 3% appreciation, right?
Yeah.
On the leverage portfolio, it was a million, So again, even if my goal was at that point to be income producing,
Yeah.
um, flipping those properties and selling and buying as many as I could to just be purely cash flowing, right? No matter what way I looked at it, knowing that in my near horizon, like that cash flow is not going to be life changing, it's not necessary, right? For me, it was just about accelerating the accumulation phase, right? And ultimately what got me more in 10 or 15 years. So
Yeah.
yeah, that was really my decision making process was what do I want to trade basically $2 million in equity in 15 years for $60,000 a year of income. And that was literally what it came down to. That's what the decision on paper was in front of me.
$60,000 in income or $2 million in equity. Yeah,
Mhm.
that's what in the 2 million. Where were you in cash flow in 15 years? I imagine that cash flow isn't zero in 15 years.
Yeah, I mean, it was basically at zero. Like
Oh, okay.
because I literally, but again, that was like cooked into my plan, right? Like
Yeah,
I literally cooked into the plan what I call like a serial refinancing plan, where it's like every 5 years of the 15 years, right? Assuming that the
got it.
market appreciated like it has, and there's 25% of additional equity built over that period. I was
Hmm.
basically refinancing and buying as many as I could with that money. And so, yeah, it was basically cooked into my plan. Like at the end of that period, it was no income, but that was like how I planned it basically, right? It was purely the play for me at this stage of my life is not about cash flow. It's about, the equity growth basically. But the
Yeah.
cool thing was, and I wish I don't have it in front of me at the moment, but I did run the scenario basically of okay, I come to the end of that 15 years. I have this portfolio less, $2 million less, but producing 60,000 already. Or I take this other portfolio and I sell all the properties and I buy or pay off as many as I can, right? And just have a purely
Hmm.
cash flowing portfolio. And at the end of the day, it was almost double the cash flow or double the cash flow, right? Because,
Yeah.
ultimately kind of your rate of return from a cash flow perspective is going to be, on a cash portfolio, you have double the equity. It was very similar. It was almost double the actual passive income and rental by the time I flipped out of those properties and just had cash properties. So yeah, it was pretty compelling, man. Like I always emphasize personal finance is personal, right? Like if
Yeah. Yeah. Yeah.
you're just needing, if $1,000 or whatever in your stage of life or somebody's stage of life is like life changing or important, right? Or really moves the dial,
Yeah.
or they don't have 15 years to just, because it's it's not, I'm taking on debt is a risk, right? Like I have liquidity. I think it's a low risk because it's real estate, and I think that historically, like there's a high probability it's going to appreciate, but that's the play, right? That's what I'm betting on.
Hmm.
I'm betting on appreciation, leveraged appreciation. So for me, it fit the bill, right? Every analysis that I made, it was what I was comfortable with, right? Like what I think will happen 15 years from now, if I frame it through the lens I always frame things through, it's like 15 years from now, if things go the way I think they will,
Hmm.
I'll regret not making that decision. Like
Yeah.
that's what it
Yeah.
is.
There you go. There you go. Like making it not lack of regret, right? Like not
Hmm.
wanting to regret a decision of not making a decision. I love that, man. That's cool.
Which, by
That's
the way, that's kind of I didn't throw that in, but when I made the decision to accelerate the other three early on,
yeah.
was I was literally sitting back and I was thinking, I think I think if I buy two of these now
Hmm.
with the other relative options in front of me that I don't feel like any of them are great places for money,
Yeah.
like I literally sat there and I had the conversation with myself. I'm like, I think 5 years from now, which we're almost there, and it's
Yeah.
true, I would have regretted only buying two. And sure enough, here we are almost 5 years later, and that's definitely true, right?
Yeah.
That's kind of the worst thing is when you have the success you think you're going to have with something, but you
Yeah.
just went in a lot lighter than you know
Yeah.
deep down you should have, right? So,
Yeah, I had that same thing with my third property, right? Like I had the opportunity to kind of like stay within my preconceived budget and buy one property, or I could like I think I was looking at like a property that was like $180,000,
mhm.
or and that was like a maybe like another two one bedroom, something like that, or this four two bedroom in Arlington for like 215 or like 220. And I remember thinking to myself, it's funny because it's a similar rubric of decision making regret, but it wasn't like will I regret not doing this as much as like I don't see myself the chance of me regretting not pulling forward extra capital into real estate the moment that I can
Mhm.
pull it into real estate based on
Yeah,
all these stories of everybody that I've heard of just like the whole game is like push in and wait, like how much can you push in and how much can you wait and let the thing do its thing.
yeah,
Like that to me has been a big thing and it's ended up being my biggest winner property so far. That has the most equity and has appreciated and has performed like literally hasn't gone through a turn since I bought it, which is like knock on
wow,
wood, right?
yeah,
Yeah, it's been an amazing property to hold, but very similar decision. It was just kind of like, man, I can stay in my comfort zone or just push a little bit further because I just don't think in 5 years I'm going to regret, going a little bit deeper into real estate right now, right? Based on all these stories that we see on the Not Your Average Investor show. So.
yeah.
Yeah, another place where I echo with you. I want to go back to something you told me before the show, right? Like you talked about this idea of buying in Ohio, it wasn't a good experience versus this JWB experience. Can you kind of I'm somebody I've only invested with JWB, right? So like for me, I take it for granted sometimes. And I feel like it's always like the stories that we hear the most on the show are people that like did it a different way once and then went to
Mhm.
JWB and now like really appreciate the heck out of like the JWB experience. Can you I know that you're not trying to be like a corporate show, but can you just like honestly tell me what you mean by this like difference in experience and however you can quantify that of why it's so different and like yeah, we'll start there before we go into like what the courage of like trusting a different operator and doing it again. But like what
Yeah,
is the difference in the experience?
yeah. I thought about this a lot because the experience that I had was so poor, and to be honest, like it was complicated with a tenant, long-term tenant, and so like even just having an exit strategy and getting out of the property was complicated. It's kind of a mess, and um, all of the same things that you and Greg talk about, honestly, were all true in that circumstance, like the misalignment of values. You know, it
Mhm.
was they charge markups on maintenance, so it's like they're incentivized for maintenance to happen technically. You know, it's like they charged a flat, which lured me in as a new investor. Like the
Mhm.
property management fee was extremely low and it was
Mhm.
flat. It wasn't a percentage of rent.
Mhm.
Well, 10 years in, I realized, well, it's not a percentage of rent. Like there's really no incentive for them to go and be proactively raising rent. Like it's just all these things, right? There was a misalignment of value. And it was like pulling teeth for me to get them to do things that just needed to be done. There's just a lack of infrastructure. So it was actually a turnkey company that I think is a more typical model, not the vertical integration, but it was a company that would buy and rehab the house and sell it as a turnkey, but they would hand you over to another property manager, right? And so it was like, they kind of made the sale and they moved on and even problems with the rehab property, things that really weren't done right was kind of complicated because like once the sale was over, you're dealing with the property management and it was just really all the things. Again, this is not me shilling for JWB. This is just my real
Yeah.
experience, right? It's like
Yep.
exactly what you all say and talk about commonly about those misalignment of values was what I experienced. And so um I am thankful and grateful that I had enough margin in my life, to I would say give it another try. But
Mhm.
that's something that I always want to communicate is like, man, Um, I can see why because buying real estate is such a big commitment, right? It's such a just coming up with the deposit and the closing, and you've got a period paying closing costs, you've got this break-even period, and it's just a big commitment, right? Compared to buying $100 of stocks or whatever it is, right? It's a different level of commitment, and I look at my experience in the beginning with Ohio, and it was like, if that was that could have very easily been the end for me, right? I could have bought that property and that was my lived experience. This is awful, and this assume this is how all property managers are, and um, instead, thankfully, I was able to take from it just like basically everything else in life, right? There's good operators, there's bad operators, good people, bad people. Like it's far more complicated than that, and so I ended up deciding to give it another shot with somebody that I had done a better job of vetting, I would say.
Yeah.
And so, it wasn't me going in blind, but I got a lot of referrals and did a lot of vetting and ended up landing with JWB and having owned both the properties in parallel. Shout out to Ashley, my property manager.
Yeah.
Literally the five properties that I have were like a fraction of the maintenance, like hassle. I mean, literally from just the amount of interaction to the problems to literally anything. Like I had one property in Ohio and it was probably three, four, five times the hassle of the five properties over here being managed by JWB. And that's like the real ratio. I mean, it was night and day. And so it was exciting for me, right? Because it's like I got this real relative comparison of a good property manager versus bad, but it also was like, made me realize like I kind of just accepted if you want to own real estate for the asset that it is, you kind of just have to put up with that, right? And that wasn't the case. But yeah, that's kind of what I wanted to share was I can see and I have seen this with investors, right, that go and they have this bad experience and they ended up basically excluding themselves of one of, if not the best, like asset class, right, that they could have because they had a bad operator. So yeah.
What was that conversation what was the conversation like with like your wife of we're gonna buy five after having 10 years of like a headache, one property, telling her that you're gonna go buy five properties or two, right? Like I'm you know, just asking for a friend here, right? Because it's not easy, right? Like I think I don't know if I don't know how much y'all talk about it and how much you've brought her along. For me and my wife, it's been I'm the guy that's like really rah on the real estate stuff, and we're now starting to see like real returns from it. So she's more on board with it. But at the end of the day, real estate's real estate, right? Like you still
Yeah.
have to deal with like a turn here and something there, and it's never there's always those kinds of things. So when like wanting to re up and buy more, especially if like now you're going like new operator, less tried,
Mhm.
I think you know what I'm asking, right? Like
Yeah.
like what was that? Did you have to like win her favor on that? Was that, or did you just have to win yourself on it? Does she trust you implicitly? Like, how did you overcome the gravity of like having had such a bad experience the first time to now go like even deeper into an asset class?
Yeah. For me personally, I think that like, I mean, she's really just has like a really deep trust for me,
Yeah.
And I think a lot of our journey up to that point, right, just like had kind of proved to her, right, that I would make decisions. They all seem to turn out well, Could have been luck, could have been whatever, right? But in our particular case, and the way that the dynamic in our marriage worked, like it was actually pretty easy,
Mm.
Um, she homeschools her son and stuff, so she has a lot of, responsibility she's dealing with, and not that she's not, involved, but she's not as interested in the investing side of it, right? And so even like the property in Ohio, I mean, I would communicate, and she'd hear me, complain probably about things that were happening or whatever, but it wasn't,
It
something that
wasn't,
she as
she wasn't
directly
bearing
was
the brunt
dealing
of
with.
that pain.
Yeah,
Yeah. I got you.
exactly. Yeah.
Okay. Yeah.
So, and she was plugged in with me on the Fortune Builders and we did the trips and all that. So like the fact that it's
Yeah.
kind of vetted and it was a handoff from that whole relationship and stuff, it was, yeah, just with the dynamic in our relationship, it just honestly was
Okay.
really easy.
So then for you, you said you did a different level of vetting this time around when like going in with JWB versus the first one. Can you tell me the difference in that?
Yeah. Well, the first time around, unfortunately, I didn't do any vetting on the property management group,
Mm.
which I just didn't really understand how it worked, right? To be completely honest, it was, a larger turnkey provider. I would say they're somewhat reputable in the north, but yeah, I knew I wanted to own real estate, right? And I knew I wanted to be managed and be passive to whatever degree that meant at that point in my mind. Um, so I found what seemed to be a reputable turnkey provider, and had some conversations like the asset itself. But I didn't really know that the management would be handed off to somebody else. That was a
Hmm.
completely different business, completely different entity, right, than who I actually bought the property from. And so, to be completely honest, like I vetted to some degree the company I bought the property from, but I didn't vet the property management company, which is the most important one, the one that's literally going to manage the property for, as long as I own it, right?
Yeah.
So that just kind of happened as a sub transaction of the purchase, and then they handed me off, and you know I didn't really, kind of goes back to like you don't know what you don't know. Like I didn't really know if I was being mistreated or if it was just like if
Yeah.
that was just how it was, right? So,
Yeah. Yeah.
but yeah, to vetting JWB, so I basically didn't vet them, and then JWB was, again, it was the relationship I had with Fortune Builders. They had the passive income club, and so I was kind of referred over, and then just did a lot of research on what your common like real estate blogs, and Um, ended up interviewing some people here and then with other turnkey providers with JWB. And yeah, I just, everything ultimately led me to think, you know, like this is the provider that would be best for me, you know. And I definitely learned some lessons on something. It's kind of funny because I mean it's something I say all the time in business, and maybe it's just partially just me maturing, getting older, but it's like the
Mhm.
cheap comes out expensive. That was an experience that I had, right? It was like they literally, they baited me in with a pro forma that looked incredible, right? Like that's one thing that stood out to me, right? Was like it was every box of that pro forma was like as optimistic as you could possibly be, and I found that out, and the actual property management, like the fixed rate was extremely low. It was as a percentage quite,
Mhm.
lower than JWB's, right? But it's like, yeah, all those things came out to be far more expensive, right, than what they were. And so, yeah, that was something that also attracted me in my vetting process was I felt like the majority of the information JWB was that they had and that they presented was not only, do they just have a lot of data, so it made it, I think, a lot more convincing to me, you know. It's like they have all managed 7,000 properties, right? So I was convinced that their data was good, but also I felt that they were, if anything, maybe a little pessimistic, right? They're trying to paint a picture as it really was, right? Or even set expectations a little bit lower to overperform, where I felt like everywhere else I went, it seemed the opposite. So,
Yeah. It's funny. Like as you were given the analogy of the pricing, I was like, it's kind of like Spirit Airlines, right? Like you get like baited in with this like super cheap ticket, and then you're paying for seats and you're paying for bags and you're paying for like water and to use the bathroom or something like that, right?
right.
It ends up,
Yeah.
it ends up being and then it's a terrible experience.
Yeah.
Yeah, that's interesting, man. The whole, and then on the other side is the core value of JWB of under promise and over deliver, right? Like this idea of always kind of like Greg talks about it so much on the show and talks to me so much about it, about like how on performers and all the things that they put out, it's always like as tempered an expectation as freaking possible.
Yeah.
Because and he's explained this to me. He's like sat me down and talked to me about this from like a business principle, like this idea of if you only promise things that you are 100% certain that you would deliver on, and also pretty certain that you're going to do better than, like at
Mhm.
every moment in your business, then you're going to build a great business. Like that's something that he's like hammered into me
Yep.
in the performas, in the like in kind of like the sales process at JWB, like everything that they think about of kind of like never ever ever saying something that like they're not like super sure slash maybe like over sure on,
Yeah.
as a way to create an experience is something that's really really stuck to me, and that's a really good example of it, how you put it, man. um
Mhm.
I could talk to you forever, dude. Like you just have this like awesome demeanor. I feel like when we talked at Summit, we talked for a while also.
Yeah.
And you got so much knowledge. Is there anything before I let you go and we go too far over here, anything that we haven't hit on that you want to share, or any kind of like bit of advice that you would have for like a first time investor or someone trying to like, build a portfolio like you've been able to do?
Yeah. And I think we've hit most of it really. I would say the one thing is just, I ended up making this decision to get some more properties or whatever, and it's not making the pitch for people to do that at all. What I'm making the pitch for is like it just having that conversation meeting there was like helped me, sit down and really reevaluate, right, what I wanted long term, like what my plans were, what I really wanted long term. And it was wild because as soon as I did that, right, um, it became pretty clear. I ran some analysis and I kind of painted the picture of what I wanted my future to be like, right? And then
Yeah.
ultimately it's like until you do that, it's very difficult to take the steps, right? Until you know where you want to be, it's hard to know whether you step to the right or to the left, right? So like
Yeah.
that was for me, what's kind of neat about that was I felt like I was just on the path to doing what I wanted to do. And sometimes just taking the time to really, you know, take stock of where you are, right? And it's like, because I always kind of do this in the big picture, but take stock of where you are and take stock of where you want to be, where you'll thank your future self for where you end up, right? And ultimately, you know, like just one of the biggest lessons I ever learned was like, don't let perfection be the enemy of progress, right?
Mm.
So it's like, man, I don't need to know ultimately for sure. There's never going to be any guarantee, like one way or the other, not a guarantee, but ultimately, like to be somewhere that you're not, you've got to put one foot in front of the other. So yeah, I'll say just that's my piece of advice would be just to kind of reevaluate where you are in life, where you want to be, and let that guide the steps forward.
I love it, man. I love it. Josh, I know that you're an entrepreneur, you're a busy guy, you don't get to make a lot of these live shows. So I really appreciate you taking time to do this today, man. This is really awesome getting to talk to you. I want to
You
thank
too,
the
Pablo. Thank you.
yeah, man, for sure, for sure. And I want to thank the community for being here, taking an hour of the day. Next week we are talking about property taxes, right? So I feel like there's been a lot of chatter around property taxes and like are they going up? Have they gone up? Has it affected investments? Are property taxes going away in Florida? We're gonna do like an overall encompassing show on property taxes because it feels like it's something the community wants, and that is one show ahead of our 500th episode. Well, this is 498, so we're gonna do something special for the 500th episode also. So a little preview of what's coming up. Josh, man, again, thank you so much for doing this. This was really awesome. I've really enjoyed kind of like getting to know you at the summit. I love like we have this like parallel lives of like entrepreneurship and
Yeah.
like philosophy on investments and stuff like that. I really dig it, man. So I really appreciate you, dude.
Thanks, Pablo. You too.
And final piece of advice for everybody, Josh. Do you know how we normally sign off on this show?